It doesn't make a difference necessarily what your goals and your objectives are. The advisor is going to suggest what they think is best for the client without really understanding the goals and the objectives. So as a financial advisor, listening very carefully to your clients is probably the most important thing, and then aligning the investments, which are considered like tools, with those goals and those objectives. And that's how you create that's good financial planning.
You're listening to the Millionaires Unveiled podcast, where you'll hear the stories and interviews of everyday millionaires. We'll unveil their decisions, their strategies, and their current portfolio allocation. Now to your hosts, Clark Sheffield and Jace Mattinson.
Welcome to the Millionaires Unveiled podcast. This is episode number 276. Hopefully everybody is having a great start to the new year here, getting towards the middle of January. Going to be an interesting few weeks here with the markets and seeing what the Fed does with rates. Something to definitely pay attention to as we get closer and closer to trying to see if what the Fed is doing with getting to a soft landing as it relates to inflation and wage growth and growth of the economy and everything else. Kind of in a tricky situation given the effects that we've had after printing so much money from COVID. So going to be watching that closely myself, as well as the Republicans are taking over Congress here shortly. And we'll see what happens in the White House, if that affects things very much or not. Wanted to read a review that we got just before the end of last year from Salter98. Said, a must-hear podcast for FIRE. I've been listening to this podcast for 5 years, and my financial life has changed for the better. Thank you for sharing info regarding millionaires who made a living not doing anything extraordinary, but still achieved to 10% wealth status in the United States of America. I plan on being on this show in 3 years to share my story. Appreciate that, Salter98. Once again, appreciate all those that leave reviews. It helps us continue to grow the show and get new millionaire interviewees. Today on the show, we've got Rocco. He is about 48 years old and works as a private wealth advisor. His net worth is over $10 million, divided up between his business equity, public equities, and real estate, and a few other asset classes. We get into a great discussion with him about how he chose his career path and the things that he does with his personal finances, even though he is a wealth advisor for a numerous high-end and high net worth individuals. Last week at Saul, he had just over $1 million net worth. He was in his late 40s and worked as an IT consultant. We're coming up on episode number 300, so once again, would love to get somebody who's got a high net worth that we could feature on the show. Last couple of times we've done this for episode 100 and episode 200, and it's worked out pretty nicely, so I'd like to continue that if possible. So if you know anybody or if anybody's listening that would be willing to come on, I would love to have you and love to interview you. Also, if you're interested in just being on the show in general, send an email at millionairesunveiled@gmail.com, and we'll get you the forms to get situated and get rolling on that as well. Always looking for new great guests. Without any further delay, let's get into the interview with Rocco. Rocco, do you want to just give us a little about your background and what you're up to now?
Sure, absolutely. Well, a little bit about my background. So I'm a private wealth advisor located on Eastern Long Island, Southampton, New York, specializing in working with highly successful entrepreneurs, business owners, and CEOs. Been studying wealth management for a long time. Have been working with this particular group for over 25 years, and so I've gotten to see a lot of the success secrets that self-made millionaires actually practice in real life. So it's had a great experience, a great career experience in working with that group.
Awesome. And what is your net worth today?
My net worth is in excess of $10 million, and that's between business equity, individual equities, real estate equity, and so I've made different types of my own capital investments throughout the years as well.
How would you allocate based on a percentage basis of your portfolio to, maybe the top 3 or 5 categories? You mentioned real estate equities, public equities, et cetera, business. How is that kind of divided up amongst your net worth?
I would say that, business equity is the bulk part of my net worth. And after that is is equities and individual equities, mutual funds, ETFs, and then real estate equity as well.
And do you have a certain percentage you try to allocate to real estate and or public equities each year, or is it just kind of depending on the year, how things go in the business and kicking off cash, et cetera?
Well, I'm looking at all three, and I'm trying to grow all three. So all three. So every year try to grow our business equity, and through making capital investments in our business. Our traded equities, I look at basically trying to carve off 10% of the income and make those capital investments in that space. And as far as real estate, we own our real estate that we're in as a business, and then have some additional properties as well for rental income.
And are all those single family homes or multifamily or syndications or what?
So a couple of them are single family homes. Some are commercial properties, retail space. And so it's a combination of different ones. And I'm also looking at, trying to improve those properties to try to maximize the rental income that's able to come from them.
And do you have a primary residence that you own?
I do. Yep. Own my primary residence, and big believer in people. Some people argue and say, you should rent, but I'm a big believer in owning your primary residence just so you have some kind of predictability in terms of your monthly expenses. People that are a renter, they're subject to the owner selling the properties, rent increases, all of those different types of things. And, one would say that we are in an inflationary environment, and if you're paying rent, 10 years from now, your rent could be, you think about rents increasing by 4 to 5% over the next 10 years, your rent could be 60, 70% higher than what it is today.
Is your primary residence paid for?
My primary residence has we do have a mortgage on the property, and for a couple of reasons. Number one, there are some tax benefits that are associated with it, but also having some leverage. The leverage allows us to do other types of real estate activities and be able to acquire different things. At a certain point in life, I would like to have no mortgage at all and pretty much remove all debt from my overall picture. But I'm 48 years old. I'm still in the accumulation phase, and using leverage in a smart way, I do believe helps to add millions of dollars to your net worth if it's used appropriately, right? Some people get out of hand with the use of debt, but if you use it responsibly, it could really add a tremendous amount of value to your balance sheet.
Are all your properties, do they all have mortgages?
Not all the properties. I would say that half of the properties do, and we're working to try to eliminate those. So, with aggressive pay downs. So, again, around the time where I'd like to try to have some type of, real financial independence where I'm living off of the different resources. At that point, I'd like to have really low to no liabilities at that time.
So, Rocco, how did you start working in wealth management?
If you think about the financial services world, I kind of thought, I've always been interested in the financial services world, and I've always been interested in helping others. And when looking at all the different facets of the financial services world, the area that I believe that was the best fit for me was in the wealth management world, in working with individuals and helping them to achieve the financial goals. So this was, I looked at all the different areas, and you've got areas from, being a financial analyst to operations to leadership to, CEOs. And I like the idea of being able to sit with people one-on-one and helping them achieve their financial goals.
And was that always your career route?
Well, as I was in college, I was studying marketing communications, and as I was, coming towards the end of school, I was thinking, okay, I think I'm going to be an investment banker, venture capitalist, and travel the world. And I looked closer at that work, and I realized that a tremendous amount of travel would be required. I knew that I wanted to be close to my hometown of Patchogue on Long Island, New York. And I'm very close with my parents. I am their only child. And so my parents immigrated from Italy in 1962. And so if I had this job as a venture capitalist investment banker, I wouldn't really get to see them. So I wanted to be in financial services. I knew that I wanted to be, maybe 20, 30 minutes from my home. And this particular line of work allowed me to be able to do that.
So let's talk about when you built your wealth practice. How long did it take to build up the business, and what was that process like?
Well, let's see. So I started like as an intern in like 1995, and I wasn't quite sure if I was definitely going to do this or not. So I then went to work, and I marketed and I sold advertising marketing space, which I loved, and I had a great experience in doing that. And while I was there, I did my MBA in banking and finance, and then in 1999, I decided that I am gonna become a wealth advisor, financial advisor, and I came out of it was hard. I knew that it wasn't going to be easy, but I knew that no matter what, I wasn't going to quit. It took me, I would say, I didn't have a terrible first year. I had an okay first year, had a great second year, and I've been able to grow the business every single year by double-digit growth year over year. And now, it's been over 20 years that we've had double-digit growth. So it's been a fantastic experience. Been able to help hundreds of people achieve their financial goals and objectives. And while I've been able to do that, I've also been able to help myself and my family work our way towards financial independence as well.
What were the biggest challenges in building a small business?
I think it is in dealing with human emotion, right? So you're working with clients on doing financial planning and developing strategies, and sometimes the geopolitical outside factors get involved and take people off of their plans. Markets go down, people get nervous, they sell out of their securities when they maybe shouldn't do that. And over time, I've been doing this for a long time now, and now I've gained the experience of kind of just understanding the human psychology as it relates to emotional competency for investors. And so we've been able to, through the different crashes that we've seen, from the one in the early 2000s through 08, 09, and the most recent due to the COVID situation where we had, that was a crash as well. We've been able to work with clients and help to protect them from themselves and destroying their portfolio. So, the challenge early on was not being able to work as effectively with clients due to market volatility and lots of emotional volatility. And so through experience, we've become much better at that.
So you mentioned working with high net worth individuals. From a wealth advisor perspective, what does that mean? At what point does it become high net worth?
I would say that, 20 years ago, starting off in the business, looking at when you come across $1 million portfolio, that would be considered to be like, wow, that's a substantial amount. And it is a substantial amount. But today, with the mass printing of U.S. currency or global currency, assets have grown as well. So $1 million portfolio today is different than $1 million portfolio from 20 years ago. So to answer your question, I would say that, high net worth individual kind of starts at somewhere around, I would say 5 million plus as far as liquid investable assets. That's where I would say it would start. Some people say 2 to 10 million plus. I think, when you start talking about the high net worth market, it's in excess of 5 million.
Okay. And how do your clients' strategies change as their net worth grows? And how does your advice to them differ?
Yeah. When clients are kind of just getting started, it's more about the accumulation phase. And it's more about investing the money in a way that's going to help to accumulate large amounts of dollars. In late stage investors that have accumulated millions of dollars, it's still about growth, but it's also about capital preservation and reducing the amount of volatility. So when you're first getting started, if the markets are going zigzagging up and down and there's not a lot invested, it shouldn't really bother you as much. But when portfolio sizes become larger and larger, market volatility does impact investors a lot more. So if you have $1,000 and it goes from $1,000 to $700, it's not that earth shattering. But if a person has 10 million and 10 million then turns into 6 or 7 million, that becomes, very concerning for investors.
Yeah. And then allocation wise on people's allocation, Do you have a general advice that you share based on allocation, a certain percent in the market, real estate? Do you advise for real estate, against real estate? I know different financial advisors have different perspectives on that.
I would say, to answer that question, it would really depend on what the core goal and the objective is. So if the investor doesn't need income from their portfolio, that portfolio would look different than somebody that's taking income that's taking income from their investments. Is it IRA money / 401k versus non-IRA money? So we look at taxes, we look at need, we look at, we try to understand the goals, and then we build a portfolio to match the goals and the objectives. A lot of times in the financial services world, it doesn't make a difference necessarily what your goals and your objectives are. The advisor is going to suggest what they think is best for the client without really understanding the goals and the objectives. So as a financial advisor, listening very carefully to your clients is probably the most important thing, and then aligning the investments, which are considered like tools, with those goals and those objectives. And that's how you create that's good financial planning.
Yeah. So what do you do if somebody wants to invest in real estate and they come to you and say, hey, I want to invest in some real estate. Where should I start?
I love real estate. I think real estate is a very important part of somebody's overall picture. So whether it's their primary residence, or let's take a small business owner for an example. Let's say you got a small business owner that has a nice business that he's renting the space. Well, we try to encourage that business owner to get their own space and get their own tenants, right? To help and have those tenants help pay for their mortgage. So, that it's not, real estate's not the end all be all, but it should certainly be part of somebody's overall picture. It doesn't have to be investment real estate. I mean, at least their primary residence should be owned by themselves. But from an investment standpoint, I think, most business owners, if they have the opportunity to, they should own their own real estate. For sure.
Yeah. Curious your thoughts on self-directed Roths. Are more people getting into that?
Self-directed accounts?
IRAs, yeah, correct.
Yeah, absolutely. I think, that with there's, lots of ways that investors can invest with all different types of online tools, free investing opportunities. And I think self-directed investing for the disciplined person is a great opportunity. What I found in my experience is that investments work, but investors don't, because investors get caught up in day-to-day news headlines, and a lot of times that gets them, makes them come out of the market when they shouldn't be. Like, a lot of times leading into the election, right? A lot of self-directed people say, you know what, I'm going to come out of the market because I think the election is going to send the market into a tailspin no matter who wins for the presidency, or if this person wins or if that person wins. And they come out, and it's easy to come out. What's hard is getting back in. So many times, if self-directed investors are that are following the headline, they kind of spin their wheels and they really don't get anywhere. That's been my experience.
Yeah, it's interesting. Thanks for sharing. Let me just jump to you a little bit. So with building the business and meeting with clients and your own investments on the side, real estate and other investments, how do you allocate your time and time management? What tools or systems do you use for that?
I use something called the model calendar. And so just picture a Excel spreadsheet that has along the top Sunday, Sunday, Monday, Tuesday, Wednesday, Thursday, Friday, Saturday. And I start my day at around 4 a.m, and I conclude my day. Normally I conclude my day somewhere around 9:30. And then I have my must-dos, the activities that if I did in the course of a day could not fail. Those are on my calendar. Time with my family, my things that, my kids, my spouse, special meetings with my team, when I'm going to be calling clients. So I try to put my calendar is not just complete, it's not like back to back filled with everything. It does have white space on it, but the calendar has on it the most important areas that I need to make sure that I hit in the course of a week. And not only does that tie in with my business activities, it ties in with my family activities as well as myself as an individual, whether it's, exercise, hobbies, or interests.
Cha-ching! You know what that is? That's the sound to start selling on Shopify. It's not every day that I get an advertiser that I actually have been using for quite some time, but Shopify is that. This is your sign this year to finally forget about running all of those run-of-the-mill resolutions and instead start your own New Year's resolution. Shopify is an e-commerce platform revolutionizing millions of businesses worldwide. No matter what you are selling, Shopify simplifies selling online and in person so you can focus successfully on growing your business. Shopify covers every sales channel from in-person POS to an all-in-one e-commerce platform. It even lets you sell across social media marketplaces like TikTok, Facebook, and Instagram. Packed with industry-leading tools ready to ignite your growth, Shopify gives you complete control over your business and your brand without having to learn any new skills in design or code. Thanks to 24/7 help and an extensive business course library, Shopify is there to support your success every step of the way. Now it's your turn to get serious about selling and try Shopify today. Sign up for a $1 per month trial period at shopify.com/unveiled. That's all lowercase. Go to shopify.com/unveiled to take your business to the next level today. Once again, that's shopify.com/unveiled.
When did you make your first million?
Well, I would say that my first million came as a result of business equity, and that was probably around in my early 30s. And I'm still growing business equity. And then I think we've all heard the saying, the hardest million is the first million. And then after that, once you understand the concept of how to accumulate wealth, it does become easier over time. I joke with my family all the time, and we're sitting around, and I asked my kids and my spouse, I said, listen, if you had the choice, if you could make $1 million on your own or win $3 million in the lottery, which would you choose? So my kids and my wife, they would rather win $3 million in the lottery. And they're like, Dad, why would you choose, make $1 million, on your own versus getting $3 million? And I'm trying to teach them the concept that if you win $3 million, people that usually trip over and win $3 million, once that $3 million's gone, that's gone forever. But if you have the ability to make $1 million on your own, that means that you'd have the ability to make 10 million, 50 million, 100 million through your own effort and your own energy. Big, big difference.
If the first million came in your early 30s, maybe walk us through what did it take to get that second, the third, maybe to 5, and then 10 plus?
A lot of it has to do with saving and investing and compounding interest. So, money does make money over time. And a lot of times what people say is, well, if I had some money, then I would make more money with it. But and that's true, but you gotta start by saving, and you gotta start by thinking about building your own financial plan. How can you make money? And some people make money, being a cattle rancher. I mean, there's lots of different ways that people can make money. It's not just one way, but I think people need to decide what they want to do and then build out a plan that's going to take them from, point A to point Z.
And what steps did you do? I mean, you said early 30s first. What did it take you to get to the second, the fifth, the 10th?
Planning, right? So I look at this stuff every day. So the journal, looking at my business results, taking a snapshot of where we've all heard the saying, what gets measured gets done. You got to measure your progress along the way. So you got to take a financial snapshot. So let's say that somebody says, okay, person says I'm worth $10,000 today. I'd like to be worth $1 million over the next 5 to 10 years. Well, how can you do that? There's a couple different ways you can do that. You can do that through saving parts of your income, through growing equity, right? That's another way to do it. Through buying, figuring out how to buy real estate and try to do it. So it's business equity, it's real estate equity, it's stock equity, it's income. Those are basically 4 different ways on how one could really accumulate $1 million for themselves.
Do you know what ages you did that along the way, though?
I bought my first house when I was, I think I was 32 or so. And then I bought another property a couple of years after that, and I bought another property after a couple of years after that, and I bought another property a couple of years after that. So that was, I did it at a measured pace. I never wanted to put myself in a situation where I was going to potentially hurt myself with debt. And so that was kind of my path. I mean, I always made sure that, that I was saving a percentage of my income. So here's a great example. So let's say that we line up 10 dimes on the table, and the 10 dimes represent your income. And if, most people, what they do is they spend, and then if there's any dimes left over at the end of the day, then they'll maybe keep, 3 cents of every or 2 cents of every, of that last dime. Where I go with the psychology of saying, okay, I'm going to basically carve off 1 dime first, and then the other 9 dimes, I'm going to, pay my taxes and pay my utilities and my mortgages and all my insurances. And if you pay yourself first, at least 10%, that's going to help to create financial independence. This show is about it was about the creation of a millionaire, and I can tell you that if somebody saves 3 dimes out of 10, that's how you become a millionaire and a multimillionaire. So thinking about how can you save 30% of what you earn, the people that save 30% of what they earn, they're the ones that accumulate massive wealth in my experience.
And is there something that you've seen across your client base or even yourself that has made those that are the most successful or their key qualities or traits?
Absolutely. And almost, I would say 100% of the cases, they live below their means. So they, if somebody is investing 30% of what they're earning, right, and then if they're paying taxes on the other, they're living off of a small percentage of what they're actually earning. And that's a key element. Another key element of these these people that are successfully financially is that they're working with a trusted professional team, right? They've got a phenomenal financial advisor that has their back and works with them on goal planning and strategic planning around accumulating of wealth. They usually have a great tax advisor, great accountant, a banker relationship, great relationship with an attorney. So they've got their team is another key element. They don't seek the advice of those outside professionals when a crisis hits. They have the team in place prior to the crises. And I'll give you an example on that. During the situation where a lot of business owners weren't able to open their businesses because of COVID, and they had the Paycheck Protection Plan loans, the business owners that didn't have the bank relationships or the relationships they didn't have a professional team, they struggled on getting those Paycheck Protection loans. But the business owners that had key relationships with the team that I was sharing with you about, they had no problems getting their Paycheck Protection loans right away. Interesting.
And part of that probably was just because they kept their records better too.
Kept their records better. Everything was just easier. The ones that, as a financial, we were getting phone calls from people saying, can you help us? Can you, people that we didn't really know, can you help us get the loan? And, they had no banker relationship. They didn't have their payroll records in place. Didn't have a great relationship with their accountant. It just, the time to make sure that you have all those things ready is when things are calm, not when there's a crisis like we saw in basically the spring of 2020.
Yeah, awesome. And what's the biggest struggle for people that sell their companies?
The biggest struggle is that this is what I've seen is that they initially, in the process of growing their business, at a certain point, they kind of forget what it's like in thinking about what am I going to do next, right? We all grow up and, you grow up and you start to, okay, when I go from, elementary school to middle school to high school, I go to college, and when I decide to buy my house or get married or whatever, the business owner many times kind of forgets thinking, what am I going to do after I sell the company? They kind of lost with that. And they don't really know what's next. So a lot of them struggle with that. A lot of them struggle with what could potentially be the tax impact. A lot of them struggle and say, I've been, deriving income from my business for 40 years. How am I going, and I've been an accumulator. I've been banking money. You're telling me that I'm going to have to draw money on my portfolio. So you see business owners that struggle with that as well. So that it's not as easy of a decision as you think it would be to sell your company for 20, 30, 40, 50 million. There's a lot that's involved in it, and there's a lot of unanswered questions.
Yeah, so those that have gone through it, either sold a business or even retired, I would add, did they struggle after that with the amount of downtime they have? Did they feel like they had to take something else on? How was that transition for people?
Tonight I was with a business owner that had a professional services firm. He sold his firm, and he's like, I don't even know how I'm so busy with life that I don't even know how I even had time to work. And so I've been dealing with a lot of business owners that have sold their companies. Not one of them has ever came back to me and said, I'm bored. I really don't know what to do with my time. The time gets filled up with leisure activities that they really enjoy. I mean, they all say the same thing. I miss the relationships with the clients. I miss helping people. There's certain aspects that they miss, but they do not miss the daily grind, the stress, and the worry, and which is wonderful to see. And I hear that pretty much 100% of the time.
Interesting. So just shifting gears to you, what was your biggest investment mistake?
I would say that for me, I would say in certain aspects of things, I could have taken on more risk, more calculated risk, but I chose to take on less calculated risk, just for fear of what happens if it doesn't work out. So, even with, my primary residence, right? So I live here in the Hamptons, and we've got a great home, love my house and everything, but I kind of wish that I would have taken on more risk when I was buying this home, my first home, and we're eventually going to sell this house and buy another house. But if I would have taken on more risk then because prices have skyrocketed here in the Hamptons, so sometimes not taking enough risk is sometimes a bad business decision. So you gotta don't be afraid, right? You got to understand your risks, and sometimes you might have to push yourself to take on a little bit more risk than you're actually comfortable with.
And in that situation, you mean a bigger mortgage?
Possibly, yeah. Possibly a bigger mortgage. I mean, it depends. Listen, it could also go bad as well, right? Let's say somebody does that, and they're buying at the height of the real estate market. That could hurt them too. So there's certainly risk that's involved in anything. I'm just, when you ask me the question around what's been my biggest mistake, I would say my biggest mistake was that I really didn't take on. I could have taken on more risk over the past 20 years. Listen, I've taken on risk, built a business, and I've done real estate ventures and things like that. And I've done it in a moderately conservative way, I think. But if I would have been a little bit more aggressive over the past 20 years, right, anything can happen from a month-to-month or year-to-year basis. When you're looking at investing, if you look at it really from a 10 or 20-year perspective, historically things do work themselves out. Anything can happen over a 5 or 7 year period, but usually when you look at things from a 10-year or a 20-year perspective, things typically work themselves out.
Yeah. Well, awesome, Rocco. Thanks for coming on. If people want to hear more about you or get a hold of you, where can they do that?
They can Google me, and they could, one of the things I would tell them is pick up my first book, The 3 Chords Approach to Life and Wealth Management for Business Owners. It's available on Amazon. It's available, I think it's in Barnes & Nobles and many other locations. Read the book, and you'll get a good perspective as to what we do and how we do it. And then, stay tuned for our next book, which will be coming out next spring.
Awesome. Again, everybody, that's Rocco, net worth over $10 million. Thanks for coming on, Rocco. Really appreciate it.
Thank you for having me.
Thanks for listening to the Millionaires Unveiled podcast with Clark Sheffield and Chase Mattinson. For more stories, investment opportunities, and information, check out our website at millionairesunveiled.com. See you next time when you'll hear from another everyday millionaire.